Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video, I wanted to go over a couple of earnings trades that I'm going to be looking at tomorrow, which is going to be Tuesday the 10th. The first of which is EA. So, something interesting about EA, and we're going to come back to the daily chart, but let's start off by looking at the weekly here. And it's a point I guess you could argue, but I think it's interesting to look at situations where, like here for example, we actually made it through the symmetry of the previous rally, but this zone ended up being relevant. To me, this is exaggerating the idea of similarity to some degree. You've got the same thing that you're looking at from essentially this swing low right back up into here in relationship to this rally. This one's always important to me because it's kind of the exhaustion swing for bulls. So, at any rate, it's a zone I'm watching, and whenever I look at something and I say I end up having kind of a mixed view even there, I'm going to err on coming back to something like the daily chart and saying since we're below all of our broad moving averages, I'm going to err on playing it to the short side. So, basically we're just going to look at the technicals on that one. To keep a long story short, I think just selling call spreads above it would be the easiest way to do it. If you can scale into that and give yourself some time on it, that would be even better. Looking at FOSL. Also reporting Tuesday after the close, and I'm looking at several strategies here. The two most basic, playing both of these to the short side, and I like to look at the idea that anytime you have something like a gap that is also right near the expected move, which is right near $5 or so in FOSL, doing something like a $3 wide butterfly around 35. Pricing that out right now is going to run you about 40 cents, give or take, and I think it's good risk reward, which is something you always want to consider when getting into your earnings play. One last one that we're going to look at tonight is sometimes just looking at the idea that I think approaching some earnings after the report is a better idea, and that's what I'm looking at here in Disney, because it is getting up through its 200-day moving average, and on the weekly I don't have any direct resistance per se. I guess the main thing on this is that with the expected move, which is currently, when we look at the option chain, we're currently looking at about a $3 move. So when I think about that and really don't want to pick a direction, or I don't like the idea of doing an iron condor, just wait for the results. And in this case, if we fell the $3 into 102, give or take, I think that'd be a place to try to look at selling put premium. If we jumped up into 110, I would look at selling call premium. If something radical happens outside of those two scenarios, I would avoid it and reassess it after earnings. So, we're going to look at some more strategies in the paid video, but I hope that gives you something to think about and consider with your earning setups. I also wanted to make sure that you were all aware of a webinar that we'll be doing tomorrow afternoon. So after these earnings, we will have a free webinar with John Carter from 7 p.m. to 8 p.m. Central that is going to be going over some of the futures trading that he's been doing to help grow and meet his account goals in this year. So, if that interests you, I hope to see you there. Otherwise, we will see you at the next free video.